Hello, hello. Let me load this up. Okay, hello, hello. Just get started. We still a little early stream here. So we have Asia opening up, very, very bullish. Most likely through ER news. Just keep on grinding and grinding, grinding. Basically 400 points higher, 500 points higher. Just that open. And we have FOMC coming up in a little bit here. I am gonna still look for longs until we show willingness to move lower, which is that 15-minute gap that is marked there. Let's see a 4 hour here. 4 hour, very bullish closure on ES here. Thank you. FOMC boss and is higher. I think so too. It looks very, very bullish. This is a weekly here. We have a weekly fair value gap, but it's quite high up there. I'm not gonna be trying to actively trade. I'm just gonna watch type price action, and we'll have some evals ready for FOMC as well. But I want to just take read and just share my thoughts. Let me just tell her we're on. Where's Lantone Desi? Tell them if they want to join, they can join. I picked up some Apex evals. Gonna use that and some iPhone features. I just want some starters, guys. Let's see what happens with that. What do you guys think with FMC? Bullish or bearish? Will FMC be good enough for exploit? I believe so. It's 50-50. Sometimes it doesn't, but for the most part, it gives a pretty deliverable move. It might just be too choppy though. It really depends. We'll see if we get something out of it. But I'm gonna try to play with some my fun for each eval to get some more reserves. Is that back into hourly? Very, very bullish on every hourly close. Essentially, just moving higher since Asia open. Yeah, and if we're bearish, we're likely going to try to tag these FMC or let-in lows here. We'll see if we want to fill this gap that we grinded in Asia. But I think looking at the higher time frame, we still have quite the gap up here. It's very evident on most time frame. Let me see. Do I have a gap? I'll just label as volume balance for now, or a void, whatever you want to call it. Yeah, I think NQ has one all the way up here too. Yeah. We'll see if it wants to fill it for ES at least. And then let me look at tech. Where the hell is it? Oh, I'm pretty sure we have Nvidia being very bullish. You can see, like, look at that gap, about 10%. It's due because AMD had good earnings report, I believe. So even though we're bearish on most tech, Nvidia and AMD is really holding up the market right now. We also had manipulation last week where we kept on selling. Can you do the apex trick on my fund features? You can do it on any eval that allows it. Most firms do allow it, which is good. I'll just most likely do the sim account here. I'm not gonna share exactly, just so I don't get so prop firms don't ban me or tell me like, why are you doing this in front of everyone. I was gonna do it on a at 2 p.m. I was gonna do it on the sim account here. It'll just be like this. Boom. I'll just show you what I want to see happen. Let's say it'll be something like that. Good day, friends. All payouts approved. Very nicely done. Look at the lower time frames. We have some equal lows on ES here. But how many people are gonna try to do it on FMC drop? Not the 2:30 drop, the 2 p.m. drop. The when it releases. It would have a pretty quick reaction. That's what I'm gonna go for. And I'll try to do it with the eyes. Pretty sloppy the 1 here. I think the 5 shows it much better. But yeah, like look at the 15 also. If we get a closure here, we'll get that 5-minute breaker. Something like this. For lower prices, most likely, if it delivers before FMC. FMC, full port, aiming for Lancel's record. You only want to do on eval. I don't think you're even allowed to do unfunded. And the, why do unfund? It's most don't even allow it. I think what might be better is to do the FOMC after the news release, because you can see if there's any manipulation and try to join in on it. Top Step is the only one that allows for news unfunded, probably because they know that it doesn't end well. And they're not completely dirt cheap like other firms. Apex is like, okay, $30, $40 for eval. Top Step is full price. We're likely going for these lows here. How's everyone doing today? Another equal low there. Right at that 15-minute, but it's likely to get smashed through. This is going to be a good scalp draw if we come back up. We're just building liquidity there. Let's see if they say scalp opportunity though. Didn't realize it's SMT here. What's up, guys? Hello. We started a little bit early, but leaving some quad lows down here. SMT off these highs. See if there's any good scalp opportunities here. I think we're gonna try to move back up to this breaker. I want these lows. I'll try to see if it is a short scalp on NQ. Pretty bullish day. Where do you think draw liquidity is? I would like higher. I'm looking at the 4 hour. I want to see ES press this gap here. There's some good lows to target down there, but it's not easy enough because we're so bullish. Oh yeah, like stream for giveaway, guys. Well, oh, there's that low taken there. If this sweeps and then flips back up, I'm gonna look for longs. I'm just gonna keep on scalping longs until it breaks. I'm probably gonna not take any funded trades until unless I see something clear or after FOMC. We already got a big move. What's up, guys? Hello, hello. This would have been a good short here after we get SMT that break a short here. SMT up here too. Deep sell. We're gonna try to see another retap back inside this 50-minute here. Oh, good hold here. I'm gonna look to scalp this inversion on my top step. I'm gonna try to get some trades going on my evals. What? Get some reserves so I could be safe. 5 top step funding accounts really can do a lot. I really neglected top step for a bit just because I was too overwhelmed with trading a lot of the firms, but 5 top step is really good. New solo day. I think we have a group session or trio for what do you call it? For Friday. All right, let's see if we get a conversion here. ES looks pretty bullish right now. If this can flip, I'm looking to take longs on the closure or the retrace. We'll see. Nope, not yet. Next candle. Let me also fix this. The checklists, we're bearish on higher time frame, but bullish on the other intraday and low time frame. Getting a good push here. Might be delivery off this breaker instead. SMT again. Let's get a nice displacement through this. There we go. Close, and then if you retrace back down, look for the longs. I'm just gonna mark this as inversion, just because more likely would be one. In 9 seconds. Look for a retap back down. Push higher. Same thing, NQ. I want to see this as manipulation here. So if we come back down, I'm going to join in longs inside this breaker. I still want it. Here, let's see. This will be kind of the idea here, though. I like NQ just because it's more bullish, but I'll probably do like something like that. Target. I'll see say they for ES here. The exact entry is probably gonna be vary, but I like this move back down here. I can do ES or NQ, doesn't matter for me. I would like that retap back in that version though. Even that volume balance is pretty good here. You've been waiting since June. What is waiting? Apex not paying. Been waiting since first June. They most likely would have given you a notice of the reasoning, something like you got denied for this, or they need more information. Usually they would give something. But yeah, do let us know if they haven't even done that bare minimum. We'll get a 5-minute breaker too, it looks like, at this rate. Whichever comes first, I'm fine with it. This worked here. Still like longs. What time is FOMC? It's 2 p.m. release. And then the press will be at 2:30. Good holding though. This is why I like this as manipulation right now. I should have looked at longs already. I really should have just joined long in the divergence. I was hoping it would close right there, but it came back down, so I waited for more confirmation. And then wait for the breaker to close instead. This would have been the entry in here though. That retap back down. That should have been good enough. Yeah, it's disgusting. Let's see if there's another trade idea. I like longs. I want to keep on scalping longs. Let's see. I still take this entry if it comes for it. Look at that 5-minute too. 5-minute close. Confirm a 5-minute breaker. Unmitigated 5-minute fair value gap. 15-minute fair value gap still holding nicely here. NQ basically dipping the hourly, looking for higher prices. Is pretty bullish. Still pressing higher. Wow. Damn. That would have been a good long. Waiting. Yes, sent message to support, and they said I must wait until my stats are set paid and the funds will be set. Before it only took 9 days since Lancer would cage or whatever. Apex changed everything. I don't think individuals cause it. It's more what they've been trying to do lately with a new promotion, all these other things. 5-minute breaker should, yeah. If it comes back down, then this is good long for me. I like this. Pressing higher still. This is a pretty bullish move here, though. Is FOMC good for eval passing? CPI and non-farm payroll FOMC is hit or miss. It depends. There's sometimes the 2 p.m. press release just does nothing. So you gotta be prepared for that. But it's worth a good attempt, as long as you're okay with it flopping. Then I'll say go for it. But if this is life depending for you, wait till non-farm payroll, which is Friday. It's like 2 days after. You guys can wait. FOMC is usually 40-50 points. The release, yes, but yeah, after the delivery, it could be sporadic, move aggressively, and the 230 move could really slam it too. I'm gonna sip water real quick. I'll be right back. Okay, back. We're gonna try to do it on stream as well. So if you guys want to join along, feel free. Man, this is so bullish that I missed my entry. I should have just taken the inversion. I don't know why I did. After the inversion here, I'm like, where I shot this high, I'm like, this is a breaker. If it just come back down, this is gonna be very good. I should have just took an entry though. That's stupid of me. We did everything we needed to. Now we're delivering from the second breaker now. Still want longs. ES on the other hand is struggling. We have this 5-minute retap that's been holding it back here. I still like longs. Stop should be at this low though. If you want to be conservative. I think we're still bullish here. Dorian, my stops are break even for ES. I'm glad that you took the trade or went longs. ES is flopping a little bit though. Can this just come back down and slam it up higher? That'd be beautiful. My target is 19,500. Yeah, I think we're gonna get there too. It's just a matter of time. Just waiting game now. Okay, it's pressing higher. Good for you guys for taking those trades. I just want to see on the higher time frame too, how far are we? This low would be aggressive. We did a pretty deep manipulation. Just putting it like that. Me. Just go for that high all the way to the swing low here. This will get equilibrium at 800, where the gap is essentially. It's interesting. And the gap for ES is just right at that premium side too. Yeah, so quite interesting here. Still pressing higher. Come back down here. If this fails here, I want to see it come back. See what happens with this breaker and see what happens with this breaker. Let's see this candle. Very bullish, as we expected. Bounce up there. What's up? What's up, Mike? Haven't displaced yet. Lots of relative lows down here. Still bullish here. We still have till 324. Oh, what the hell? What was that? Why I feel like FOMC? I was like, is it time already? That looks like it moved so hard, but it really didn't move that much yet. But wow, that's crazy. That was sporadic too. Come on, just take a jab back inside the breaker here and then slam it up. Where's that? The 5 and the 2. I'm gonna try this long. I have 840s here. I think I'm sure put my stop down tight there. I'll watch it. Wow, it's so aggressive. Oh, we might get this closure down here. We'll see. I'm likely gonna kill it soon if it. I'm at 840s right now, or not 840s, 440s right now. Long. Let's see what happens here. It's so aggressive. I want to see this hold, but not sure what happens. That's such a deep drive down. At least it's turned here. Doing this on my eval. I'm not gonna take trades unfunded till FOMC release. Yeah, I'm about to take 9 points here. Try to keep my stop conservative. If it makes a new low, I'm gonna get stopped out. I might stop at 430 right now. Right there. Need to see this turn here. Breaker still held. It's great. Goes inside of it, yeah. Alright, looking pretty good here. I need to see this pump here. 5-minute pushed back down, close above. Pretty good. If we can get a pop back in here, I'll take some off, but I think we'll just do this. This is what I want to see happen. Came back down. Alright, have a hard stop on still. My entry is basically at 440s. 10-point stop. It could take me out. Let's see a higher move though. Looks like you want to sell. Probably get stopped here. Got taken out there on MQ. I don't know what caused this candle, but this caused it make a 20-point jump down. Wow. Good stop though. It was originally 8 points stop, but I moved it to 10 just so I give some more wiggle room. This is gonna happen right before FOMC here. Did it leak? It could, maybe. Is any Fed speaking too? That's also probably a good question to ask. I'm gonna look for the next setup. This looks so fake, man. I still want higher. I feel like that's a fake sell. Let's see what I want to re-enter here. I need to see some more displacement. See this 5-minute close. The 130. Nothing yet. If this can hold here. There's a 5-minute close and the 15-minute as well. Close inside. It's better to take just the 10 points than mess around with this. Wow, what is this? This is a very aggressive sell. That just makes me think, like, what happened this candle here? Made it such a strong move down. I don't even know what happened. I'm not touching this until most likely I have to see here. Let it melt down. Was that a leak? What is this move? Hopefully, I want to see this manipulation because I still want us to press the gap. Is there any point in buying more than 50k with Top Step, or is it not worth it? I would go for the 150k. I'll be honest with you. Because the activation fee is fixed for all accounts. You need to have more value going for the large accounts. A sharp drop. Any MyFund feature reset codes? The reset codes for starters is already cheap enough. Have you guys tried using the code? Does it give you an extra discount? Or does that not work like that? I'm not sure. Oh, your code doesn't give a reset. I guess it doesn't apply then. I was just making sure. Why is that? Does it not give resets? Let me ask to make sure. We're just waiting for the news release at this point. $2 reset discounts on my phone. Every dollar counts. I think it'll be 250, right? Or no, I don't. Yeah, 5%, 250. Yeah, that makes sense. It counts. I want you guys on that. I just bought some MyFund feature evals. I'm doing the starters one. I'm thinking of doing the larger accounts, but I have the 50k at the moment. He Top Step reset. They don't really do resets like that unless it's Top Step TV, which maybe. But even then. Let's wait for the 2 p.m. release here. You were on board today. What does that mean, on board? I I don't know what your guys' opinion is, but there's someone DM me saying like, "Why are you still promoting Apex? You're a smart guy." I'm just responding to it. Like, they're still paying traders, and all I know is they make a lot of money on traders who fail because trailing drawdown. And I'm waiting until they unjustifiably deny people. They still pay a lot of traders in our community each day, so it's still a platform that I'm using, and I'm sure you guys are using as well. But oh, what is this, like, quick moves here? What is happening? What is happening? Pre FOMC. Strong move. The red, is there a red folder news? I didn't even see any. If we N versus NQ, I'm gonna try the long. We inverse this NQ. Look for the long here. We have a big gap to fill. Move back up. This is pretty bullish here. Or, I feel like it's bullish. Look at all these deep sells here. We need to deliver a closure above. Oh, likely return back down for higher. I want to see this push higher though. I want to see it coming back to this, where this BPR is. I want to see this trade in this BPR. Come on. Very slight tap. This would be the displacement I'm looking for. The highs. I did not get that good fills on them. I was hoping it would have drove down a little bit more. I just closed it out on the eval trade there. Damn. I was hoping another push in the midpoint of this, but closure on the inversion, retap back in BPR inside the inversion as well. Bullish move. See if I can pass some evals today. Don't log thumbs up. I'm still looking upside, to be honest. I'm gonna look for re-entry long as well. This could hold displacement up. So here we want a pullback and go to high day. High day is so far away. You guys don't know, the range is large. FOMC, yeah, 13 minutes. I'm just scalping on these evals right now. How low are you planning on passing evals? I'm gonna do some on the news release at 2 p.m. All right, now I want to see this breaker hold for longs, more longs. So about from this inversion here, about 25 points if you got that. I just took it at this high here, this eternal high. I wanted more of a fill down here at this BPR, but closure of the inversion was the entry. There we go, looking pretty good. I like this pushback up. FOMC wicks both ways. Sometimes it does, sometimes it doesn't. within in 5 minutes, I'm gonna share what I want to see. I'll do it on. This is a paper trading account. I'm gonna do it on the paper trading account. I don't want to be incriminated if I don't know if it's something I've even watch Apex be like, why are you showing this? So that's what I'm doing on a paper account for the live stream. Look at that push. Oh, that inversion. I closed it way too early, man. I really did. Such a large range going right before news release happening. 5-minute closure would violate this bearish gap, and we're gonna look to press higher. That could just be the manipulation before it move higher. I would love that. I would actually love that a lot. Mike Iverson. What's the game plan? Ready to gamble? That's what it is. Let's see. I'm gonna try to give it some space. It does wick, so you probably want to give it about 20-25 points away. Hopefully that's enough. But most likely at a turtle high or low somewhere. Hopefully that is safe enough. I'm gonna take a quick piss and then we'll look to put our orders in. Okay, I'm back. Okay, 7 minutes before the release. Pushing higher still. What do you guys think? Comment in the chat if you're thinking upside or downside for FOMC. The initial move. Look like a trap. Down. Oh, a lot of people are looking at downside right now. I wouldn't be mad at it too. Initial downside and upside, I wouldn't be mad at that. I'm drawn to upside though. Wow, look at that push. 5-minute closure coming up here. Dude, I feel like this is gonna pump so hard. Okay, right now, I'm gonna give it, like, probably this high, this gap here. As long as, like, it's 15 points away for a market price, that could be good. And then the downside, maybe, I need to see what low it wants to make first. But we could do this low here. Dun, dun, dun. About 40, 50 points. I don't know what I'm thinking right now, if this just stays in this price. We still have 4 more minutes though, so hopefully you guys took that inversion entry here, because I was still looking for upside. And it's such a big push. I did I definitely closed it a little bit too early. I'm not gonna get too close yet, because the last like 30 seconds it could really wick you out, so be careful on that, by the way. Even now, you know, we'd already smashed it. Whatever this low is gonna make, I think that's where I'm gonna put my downside order. I want to see upside though, but sometimes with the way the FC runs, it doesn't give you what you want. That's just how it is. Two more minutes. I could immediately see you are a bad trader, as IC said, trading red folder news is gambling. If you're thinking like that, I guess you're thinking way too deep into other people's words. This is trading on evals. I feel like it's a pretty good strategy to expedite your evals, but I don't even care if I'm seen as a bad trader, as long as I'm making money with payouts, as long as I'm trading consistently. That kind of made me laugh a little bit. I know you're a bad trader. I like this high here. I don't know if it's too far if you keep on pressing down. Damn, we keep on pressing down lower and lower. I might move this high down here now. It depends. I'm gonna wait till they get closer. Oh, let's go both sides. It just wicked both sides. Holy crap. That was a bad wick. I traded on some evals that did not go well. For some reason, my fund futures was okay. Made money on it. Damn, that sucked. That was a bad wick. I was hoping it had more of a delivery. But I think I got filled on the downside first. I could definitely review that though. That was so bad. That's the part of the risk too of trading. Wait, they don't. Oh. Did I get filled on the downside first or upside first? I need to check on my broker. Or did I get filled on both? Oh, I think I got filled on both sides. That's why. So sloppy. Worst one. That was a very bad move too. So we opened up at 406. We wicked down, wicked up, both sides. That was not a good wick. What was that though? That was terrible. I'll show what I have on mine in a second here. Let me just finish reviewing where my fills is. Surely enough, these accounts, the 250Ks on Apex just got wiped, and then one survived for 300 after I closed it manually. That was not the best move though. I don't think anyone had success there. That was a bad one. We'll see the 230 candle. I still have some accounts. I want to see what we can do with that. That was so bad, man. No change in rates. Okay, was that neutral, I guess? We'll look at the 230 release, see if there's anything viable. I like upside. What do you guys think? Upside or downside? Ironically enough, it did come back to this breaker. I'm gonna try some longs on evals right now here. I think we manipulated under and we supported price on the move down. I think we gear up for a push up higher. Damn, look at that push. I can't close it for some reason, but I'm trying to do it. I'll just close it, man. I'll just sell it manually. I want that high. Oh, I can do it. That's weird. I could do it earlier. What does that mean? Oh. Oh, I have it already. I see. That's why. Just want that internal high taken first. That was a quick push. Thank you. ES took the internal high and NQ didn't. Yeah, I still want to see this press higher. There we go. Got one out there. Let me just do this. Yeah, I'll just close this then. Beautiful push. Bounce on that breaker. Look on a higher time frame. We manipulate under. I still think we press higher, and that's what we're going for. Why don't you keep your trade screen on live? For two reasons mainly. One, I don't want signal bots like waiting for me to enter, and just because I tell you when I take entries and why I take them, so people who are listening can get it. And then two, some firms do not like that. And I don't really have any benefits doing it, so. I want to see higher there. Oh, I took one off here. I want to see move. 230 happens. That's when we typically. What does even call this? Is this a manipulate down? This looks like a manipulation down here. We opened up, closed lower. What's even happened is the 230 move is the opposite of the 2 p.m. move. Are you only trading evals? I think after 230, I'm gonna trade the fundeds. I'm just waiting a little bit. Do I have a connection there? Oh, I do. Push higher. I'm still bullish here. That FOMC candle created order block. Yes, it did. That was a good internal target, though. Quick 30 points. We'd love to see it. I still like higher. I want to play higher until I see otherwise. Do you ever use change state delivery or short shift? That's essentially a breaker for the most part. Because most of the time you get a mark short shift or a delivery like that if you have a breaker setup. Well, we have non-farm payroll Friday, so that's gonna be something I'll do more. Such a bad move, man. Rent money straight to the garbage. Don't tell me that's something you can't afford, man. That's why I always say, like, when you're trading, like, gambling this on the news, strategical gambling, you want to be careful and only want to lose what you want to lose. Push higher. But Brian, I don't want to lose anything. You want to pass with volatility, but you don't want to accept a loss. That's what going through a lot of people's mind. Don't you want to be a signal man? Why are you streaming? Well, if I'm telling you, I'm waiting for this trade here. I'm waiting for this to do this, so I can look for this long, let's say. Then people who take the trade, they already understand it, and they can see why we take the trade, where we take the trade. But people, when I share like execution like that, they'll just blindly do what I do. I don't think I like that as much. If anything, I can do it on evals, but I don't really appreciate it as much anymore because I seen the repercussions of that. Quite a few trails today. Okay, let me not try to entertain them too much. Sometimes I'm just bored, but you guys are right. This troll is everywhere on me, though. This is still bullish here. Want to see if it flips, though. Where would I need to see? Let me see. We also got that 2 p.m. candle here, so 4-hour open. Good sharp manipulation candle. Try to press higher. This is holding pretty well, though. When you play it inverse and the candle wicks through it strongly, then it comes back to test it, do you wait for confirmation, then it will hold? It just depends if there's a clean draw liquidity, and it depends what my bias would be. What is this? This is really bullish. I still have my longs from earlier. Still holding them. We're waiting for that 2:30 release, essentially. Just gonna lightly chop back and forth till then. Come on, let's see, 2:30. What's the likes at right now, guys? We'll do the giveaway if we get maybe 100 likes today, just because. This looks good for upside still, I feel like. I want to see this press higher. Still like higher. ES is pressing up a little bit already. Pretty good. What is the pass for the 50k accounts again on my photo features? Is it 3k or is it 4k? I forgot. Let me see. It's 3k. That's good. That's good. I am also bullish, guys. I still have this long holding on the MyFoot evals. I had two initially. I'm holding just one. I want to see if I can pass this with it. My entry's at 21 right now. I believe it was this candle, but I just put it up here. I want it pushed back up to the 500s, to be honest. And I have my break-even stop on right now. Whichever comes first. Wait, 21. Yeah, there it is. Push higher. There we go. Get this push here. How do you determine the draw liquidity? I just look at a higher time frame. We got a quick manipulation here already. We're jabbing these internal targets. And I want to see us push higher. Maybe not all the way up here, but for ES sake, we have a volume void, gap, imbalance, whatever you want to call it. I want to see this get hit. And you look at the daily chart as well. Let me also do this. Look at the daily chart. We're inside of a daily FEG here. So let's see this press higher first. So just look at a higher time frame. Like, look at that sweep there. It's also SMT. Looks like I didn't even notice that, but I'll mark this here. That's SMT. Something like that. There we go. And ES, NQ took the lows, NQ get in, and we're trying to press higher. We in versus 4 hour, and we've just been pushing. So this is very bullish on the 4 hour chart. And we're 20 points away from this gap, about 300-400 points away from the NQ gap. So I'm like higher still. Looking good here. I still have the break even stop on. I want 893s right now. Be 70 points if it hits. 10 more minutes for the next release here. Do you like PM more than AM? I tend to like AM, but sometimes PM is more easy. How many of you guys holding long still? I am just gonna let this play out. Very easy flip here. That's probably an order block or a chasing delivered, whatever you want to call it. I'm just gonna call it order block. I don't care what the terms you guys use, but it means the same thing. There you go. Get a beautiful push up here. The upside looks free right now. The trade rate with Top Step working on Rep Console. You can't. The thing is, Rep Console only works with NinjaTrader. And Top Step Trade Rate doesn't let you connect. I explained that in the video. If you want to watch it thoroughly. What do you guys think is 230? Let's see response. A lot of you guys are saying like upside, downside, downside, downside for the 2 p.m. release. I mean, you're half correct. There's 20. This long, it looks like it's about to hit here. 493 is all I want here. I think that would also pass my eval, which is good. Goto said, I will stop profit long again with Brian. Nice. If I hit TP here, very close. I would raise my stop up, but I feel pretty good conviction right now. There's no reason for me to do yet. Should just let it play out more. Just only thinking upside until I see otherwise. Especially that manipulation move. Pretty good call for me. Does APEC have a max no trade day? Yeah, it's only my for the futures. You should for every trade you should look at the rules carefully. So you aren't blindsided if there's a rule that you don't know of. Stuff like if there's a flipper rule, if there's an inactivity rule, is there any relegation or regulation against trading a certain way, like trading the orb, which is the opening break, or trading what do you call it? There's just like many things. Like even trading news, is it allowed? Some firms allow it, some doesn't. Just make sure you are up to date with all these firms. And I think Apex doesn't have an activity rule, if you're asking. TopStep does, but TopStep I think is 30 days. So a whole month. Like if you can't trade for a month, you should let them know for sure. I know my foot feature is a little bit tight. It's like 5 days, I think, or basically a week, 7 days. You only have 5 trading days. You can't make a trade. They'll say something like, "Why you didn't do it?" And then like they'll breach your account. Not a good look, but that's just their rules. Can't hate their rules, right? All right. I forget. Does let me see. Is there a link on YouTube to find the FOMC or no? Is there a 10-day minimum on Apex? I was not aware of this. Can someone confirm on that? You have to trade once every 10 days?
I've been literally studying him for the last year, and the dude sucks. Come on, Bilal. I'm telling you.
That's some bullshit, man. You can't say
Bro,
that.
when you look at who...
Someone said not true. Yeah, I'm not aware of that either. So do let me know. For the people. For the people. Push higher, Furby. I am a little sketched that this might not, that 230 might cause something though. Hopefully, nothing crazy. Jerome Powell's gonna speak in a second. We'll see what happens. The guy Jerome. It's 230 now. He should be on. Let's see this press higher. About to hit TP here. Come on. I'll move this up probably. If we break 890s, yeah, let's move there. Whichever comes first. Boom. Look at that, $30 from passing.
Good afternoon.
On a few accounts from that trade. That was a 70-point trade for the long that we took down here. That took so long, but it was worth it. Took forever.
And the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate, and I will have more to say about monetary policy after a brief...
You guys hear Jerome Powell or no?
Recent indicators suggest that
Try to put it on.
continue to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Private domestic final purchases, PDFP,
Come on
which
now.
excludes inventory investment, government
Let's
spending,
just
and
play it
exports,
better.
and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period in the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing
Music's up
sector,
to let me
investment
do
stalled
that.
in the second quarter after a strong rise in the first. Improving supply
That should be
conditions
good.
have supported resilient demand and the strong performance of the U.S. economy over the
Look
past
at that
year.
push. Oh my goodness.
In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter.
Volume balance
Unemployment rate
here.
has moved
That's my
up,
line.
but remains low at 4.1%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market have returned.
That was such a good
to
long,
about where
guys.
they stood
Holy
on
crap.
the eve of the pandemic.
We basically saw this real time. Like, we want to see this order block hold, trade state deliver, whatever you want to call it,
Inflation has eased
run up
notably
higher. And that's
over the
exactly what it
past
did.
2 years, but remains somewhat above our longer run goal of 2%.
That was beautiful.
Total PCE
That was actually
prices
really
rose
beautiful.
2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
Beautiful
Our
trade.
monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate.
Fortune said relogged over here.
5.5%.
Brian still pats on the back.
Continue
It's because I
reducing our securities
I held
holdings.
that for 70
As the
points.
labor
I'm
market
glad
has
that
cooled
that worked out
and
so
inflation
well.
has declined. The risks to achieving our employment and inflation goals
All right, let's see.
continue
We
to
have
move
like
into
quite the
better
lowest
balance.
liquidity.
Indeed,
I wanna
we're
see
attentive
this
to the risks to both sides of
just
our dual mandate.
take a snap down and run up higher.
We have stated
Is that
we
too much to ask?
do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%.
Hope it's
The
not too
second
much to
quarter's
ask.
inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity considering
Look at that
any
push.
adjustments to the target rate,
Wow.
funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, monetary policy
Beautiful.
will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the longer run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum
I think we go
employment
upside
and
here.
price stability goals. Thank you. I look forward to your questions.
I'm looking at longs here. I'm gonna wait for confirmation here.
Gina Smilik from the New York Times. Thanks for taking our questions. Markets pretty much
This is good for
entirely
longs.
expect a rate cut in September at this stage. I wonder if you think that's a reasonable expectation, and if so, why not just make the move today?
Thank you. So,
Ah,
on September, let me say this.
let's see if it inverses.
We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate.
I think we press
In that,
higher
it
still.
will be data dependent, but not data point dependent, so it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation
That was
and
shitty.
maintaining a solid
Come on.
labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say again that the broad sense of the committee is that
Come on, Jerome Powell, give us something good.
which will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
Oh, Jerome.
So just to follow up on that a bit, if inflation behaves as you expect between now and
I want to see this press higher.
regarding
I want to see this high taken. We're
basic
bullish.
scenario
We're
right now.
propelled higher through it.
So I guess I would
Look
think
at, I'm
about it
hunting
this way.
longs pretty closely right now.
I'll give an example
I'm waiting.
of cases in which it would
Most likely, if we get closure above, this is very
that
bullish
would
for
be
me.
appropriate to cut. So if we were to see, for example, inflation moving down quickly or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove stickier and we were to see higher readings from inflation, disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be the inflation data. It's going to be the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that help us make this decision.
Just push.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular?
I just grabbed one entry right now. I'm looking
et cetera,
super
in what
confirmation
ways
so I
are
can
you
really
not
jump
confident
into
right
it.
now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories of core PCE inflation. That's goods, non-housing services, and housing services. So it's really just, we had a quarter of core inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. We just want to see more and gain confidence. And as I said, we did gain confidence, and more good data would cause us to gain more confidence.
Watching closely here. If we want to inverse this.
Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
So I would just say, really the path ahead is going to depend on the way the economy evolves. And I can't really give you any better forward guidance on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting. I would just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy.
Pretty goddamn bullish here.
I wouldn't want to lay out a baseline path for you there today. I've said what I can say about September and about today, though.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've said before that you wouldn't wait until inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market too? If the labor market is back in equilibrium, why is restrictive policy and potentially very restrictive policy, given the high real funds rate, warranted right now?
So this is the very reason that we're thinking about what we've said in our statement, that we're going back to looking at both mandates and that we think the risks are coming back into balance. We think what the data broadly show in the labor market is an ongoing gradual normalization of labor market conditions, and that's what we want to see. We've seen that over a period of a couple of years, and a move really from overheating.
If you guys got scalp longs, it's kind of hard. I'm trying to be vocal about it, but
quite closely.
That version was very quick.
If we start to see something that looks to be more than that, then we're well positioned to respond. That's part of what we're thinking.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past you've said that stronger growth wouldn't override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market than what you would expect, does that change the calculus on what you're looking for out of the inflation numbers to recalibrate policy?
So we have
just made 4K trading FOMC evals, nice.
The labor market, maximum employment is one, and stable prices is another. So we weigh those two things equally under the law. When we were far away from our inflation mandate, we had to focus on that. Now we're back to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was a gradual normalization of conditions. If we see more than that, and it wouldn't be any one statistic, although of course the unemployment rate is generally thought to be a good single statistic, but we'd be looking at wages, we'd be looking at participation, we'd be looking at all the things, surveys, quits, hires, all of those things to determine the overall status of the labor market. But we're looking at it now. I would say again, I think you're back to conditions that are close to 2019 conditions, and that was not an inflationary economy. Broadly similar.
Pressing higher, still like longs.
I think core inflation was actually running below 2%. So I don't now think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing.
I like higher, guys. This inversion was the selling point of it.
More confident that we're on a sustainable path down to 2%. So those two things are working.
That's why I see otherwise. It's pretty bullish. Whatever Powell's saying is really pumping up the market too.
Chris Rugaber at Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not, or would you consider preemptive cuts to prevent if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
So I wouldn't say I wouldn't want to see any other cooling. It would be more of a material difference. If we'd be looking at this, and if we see something that looks like a more significant downturn, that would be something that we would have the intention of responding to. So in terms of a I don't think of it that way. I think of it as, we're actually in a good place here. We're balancing these two risks of, go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates. And I think this is how we balance them. It's a rough balance, but
a little choppy right now. Wait a little bit.
It does feel like that. Again, the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1% unemployment is still historically low, and we'll just have to see what the data show us.
And just to follow quickly, wanted to see what you thought of the recent JOLTS report, which did show hiring, gross hiring, has come down even below 2019
Can you turn the
levels.
music off? Yeah, okay.
Layoffs remain low, so it painted a picture of a very static labor market. Is that sustainable in your view, or something that is worrying? Thank you.
So I think all of the data points continue to point to kind of the direction we would want to see. So that was taken as there was a decline in job openings. That was good. Today's ECI reading was a little softer than expected, so that's a good reading. It shows that wage increases are still at a strong level, but that level continues
I want to see
come down.
ES goes up
more
another 7
sustainable levels
points
over
and
time.
take a
That's exactly the
draw
pattern
dive in
we
this
want to
gap
see.
here.
So I think the data we've been seeing in the labor market are broadly consistent with that normalization process. Again, we're closely monitoring to see whether it starts to show signs that it's more than that.
Steve Leisman, CNBC. Mr. Chairman, back in March you talked about cutting
I want to
rates
see this
as a
pump. Come on.
process, and in June you talked about the idea that, well, one rate cut wouldn't do anything. So I wonder if you can sort of follow up on Colby's question. Talk about, are you weighing the economy right now in terms of its ability to withstand multiple rate cuts? Talk us through the process that you're thinking, or is it just one rate cut, or are you in the process now of thinking that rates need to be normalized here? Thank you.
Yeah, I can't really say that, honestly. We've seen significant movement in the labor market, and we're very mindful of this question of is it just normalization, or is it
There we go.
we think
I
it's
want to
just
see
more
ES
normalization, but
take a
we want to be in a
move
position
up here.
to support the labor market. At the same time, we're seeing progress on inflation. So we actually got to this. We raised rates a year ago at the July meeting, and if you look at the situation in the economy a year ago, inflation was over 4%. It was a completely different economy. Now we've made a lot of progress in the labor market. As I think unemployment was in the mid threes. So it's a different.
I'm just scalping some evals right now.
It's coming.
It's not something I don't think any entry models is available. I'm just playing the momentum.
The thing we're trying to
playing draw liquidity, which I think is higher.
So that we have we've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically unusual and such a welcome outcome for the people we serve. What we're thinking about all the time is
here we go.
How do we keep this going? And this is part of that. We think we don't need to be.
The logs at 825s right now on some scalps
because of the progress we've made.
Still looking higher.
12-month headline at 2.5.
Looking for this push up.
6. It's way down from where it was. The job is not done on inflation.
And he is really pumping. Holy crap!
We can afford to begin to dial back the restriction in our policy rate, and I think we're just as part of a process. In terms of what that looks like, I mean, I think most you would think in a base case that policy rates would move down from here, but I don't want to try to give specific forward guidance about when that might be, because the pace at which it moves.
Beautiful.
I think that's really going to depend on the economy.
That is beautiful. Exactly what I want to see.
Hi, Chair Powell with Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of good reports look like what we saw last year, where you reviewed?
All right, so we just took this draw liquidity. I'm not going to be too aggressively longs anymore. That's what I was looking for.
Actually, what we're seeing now is
let's see what happens next.
What we saw last year. Last year, as
that was beautiful.
Out late in the year,
how many people joined longs there? We were very aggressive longs. We were looking for this push higher.
Going down at an unsustainable rate.
I just closed everything.
At an unsustainable rate.
Thank you.
This is a broader disinflation. This has goods prices coming down, but we're also now seeing progress in the other two big categories, non-housing services and housing services. So, so the thing is, you got 1 quarter of that. We had 7 months of low inflation. You got 1 quarter of this. I would say the quality of this is higher, and it's good, but so far it's only a quarter. So
Relax,
I think,
still going up.
We need
Yeah,
to see more.
I think it's still go up, but this is a good area to wait and see what happens first.
2%. But as I mentioned, our confidence is growing because we've been getting good data. And things like the ECI report, and frankly, the softening in the labor market.
Yeah, look at NQ, up 600 points,
more confidence.
630, holy crap.
Not overheating. It doesn't look like an overheating economy. And
you and Lanto said beautiful
like
at the same time.
What
is that boy doing?
And if we're
is he looking for longs?
Couple of months of the year, is there any sense now that they were these blips that could have actually allowed for earlier rate cuts?
Oh, he's looking at the same thing as me.
The thing about if that's
he's looking at that gap.
Is seasonality, and it could just be very, very hard to.
That's so funny. This is what I was looking for too.
Seasonal adjustments. If that's what it is, then that actually implies that other months were reporting too low inflation. If you smoothed it out, it's a zero-sum game. And that's why we look at 12 months. We look at 12 months because that takes all that out, all those effects out. 12-month now is 2.5% headline, 2.6% core. This is so much better than where we were even a year ago. It's a lot better. Now, the job is not done. I want to stress that, and we're committed to getting inflation sustainably down to 2%, but we need to take note of that progress, and we need to weigh the risks to the labor market and the risks to our inflation target now more equally than we did a year ago.
Michael McKee from Bloomberg Radio and Television. I'd like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are, given the damage that higher interest rates do to the economy in slowing demand and raising prices? Or is it more important for the American people that you keep rates where they are to bring inflation down?
Possibly, honestly, we could just...
We've been given an assignment by Congress.
I want to see if this can hold. I don't think it would, though. Because we had such a strong push so far, and just giving some unwillingness right now.
Right. And so in our, quasi-constitution...
I'm not aggressively looking for longs anymore. Remember, you want to lean on your bias. My bias upside, bullish. And this is my draw liquidity, this volume balance.
Two variables, inflation.
That's why you saw me every time looking for longs.
You concentrate on the one that's farther away, and you take account of the time to reach the goal. So for the last couple of years, the best service we could do to the American people was to focus on inflation. But as inflation has come down, and I think the upside...
I don't think I ever shorted today yet.
...decreased as the labor market has cooled off.
It's just pretty clear that we're looking for upside.
And labor market has softened, probably the inflation is probably a little farther from its target than is the employment, but I think the downside risks to the employment mandate are real now. So we have to weigh all that. And if you think about where that takes us, is we have...
NVIDIA's up 13% today, wow.
Clearly restrictive.
What a rebound.
It's been the rate we've had in place for a full year, and the time is coming. As central banks around the world are facing this.
How many likes we got?
The time is coming.
See if we do a giveaway or not.
To be appropriate to
if we get 100 likes before 3 p.m., we'll do one. If not, we should wait for tomorrow.
So that we may address both mandates.
Well, you have event risk, basically, with the jobs report on Friday.
And I think that's basically it for me.
Are you certain that
I basically long like 4 or 5 times. I got stopped out somewhere in the very early before FOMC. Everything else, I've been looking for longs. It would work every single time.
Certainty is not a word.
This inversion closure, the retap of the FOMC here, long here. Every long is working, and we're like just super bullish.
The totality of the data, all of the data, and not just and then how is that affecting the outlook, and how is it affecting the balance of risks? That's going to be the assessment that we do.
Glad you guys took any trades with us today.
Employment report, but so much other data coming in. And so much happening.
I think this can pivot here, since we're in a gap. I want to see a short-term pivot.
Thank you, Mr. Chairman. Edward Lawrence, the Fox Business. I do want to dig deeper on what Michael and what Nick...
500 ticks on my runner, nice.
A shift in the statement.
That's amazing, man.
Between the focus between inflation and jobs.
I've been trying to hold
wage
for bigger targets today as well.
Abrupt slowing. We're hearing on earnings calls from companies like Intel abrupt layoffs. In the jobs report from the BLS, government jobs has been a leading creator. Could the government jobs as a sector hiring mask underlying weakness in the jobs report?
Well, we'll look at everything. We've seen some tendency to have a narrowing base of job creation in some months going back, but then we've had some months where job creation was broader, and also the headline number of jobs has come down. So but you look at the whole thing, and
come on, Jerome, give us something spicy.
Extra carefully to your point about government. So we'll just be looking at
this is so good. I wish I kind of want to flip shorts up here.
Could the Fed then be behind the curve? Because you said some of the reports.
Just nice
last
GP
week,
though.
you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah. So look, the objective is to balance the two risks, right? It's the risk of going too soon and the risk of going too late. We've been, we had 7 months of good inflation data at the end of last year. We said we wanted to see more. We pointed out that too much of this was coming from goods, and sure enough, the first quarter wasn't great inflation data. Now we've got a quarter that is good, and we're balancing the risk of going too soon against the risk of going too late. That's what we're doing. There's no guarantee in this. It's a very difficult judgment call, but this is how we're making it. But in terms of today, your question about today, we did have we had a nice conversation about this issue today. The overall sense of the committee, as I mentioned, is that we're getting closer to the point at which it'll be appropriate to begin to dial back restriction, but we're not quite at that point yet. We want to see more good data. The decision was unanimous. All 19 participants supported it.
Like the stream and comment username one time. We're doing the giveaway now.
Back and forth of what the case would be for moving at this meeting.
I think we're going to wrap up soon. I think that's probably
not moving at this
enough for me.
Strong sense of the
good trade. Good trade session today.
Certainly.
We played it very careful.
Courtney Brown from Axios. Thank you for taking our questions. When the Fed was raising rates, there was a lot of conversation about long and variable lags. I wonder if that applies on the way down too. How are you and the committee thinking about that?
Yes, it does. And I think the lags have kind of showed up here in the last 6 months, by the way. You really do now see the restriction, whereas, even a few months ago, people were questioning how restrictive policy was. Look at the labor market now. You can see, and look at inflation. Rate-sensitive, interest-sensitive spending. You really do see now that policy is restrictive. I wouldn't say it's extremely.
I'm just gonna do a random number generator this side, so people don't complain. I'll do 1 through 75.
It should take some time to get into.
And then the bot, we're gonna detect it. If anyone comments twice, we'll just duplicate it. 12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I think it's Ian, unless he duplicate. Yeah, he only did it one time. So yeah, you can count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. The bot didn't detect it. I manually checked it. He only caught it one time. One entry. We'll give it to him. If you guys want to see like that, I don't know if some of you guys are actually joking.
And we didn't want to go too
but
soon.
every giveaway we do is legit.
But this is how we've made that.
Even if it hits a mod, hits someone we know, hits someone 3-4 times, it's based on luck. Alright, I can stop now. Ian, Patrick, you have 3 minutes. 202 to claim, or 302 to claim your winner or your prize, or we'll redo it.
For the first half, it's not signaling a weak economy.
Oh, there it is.
Also not
All right,
signaling
that's gonna wrap up the stream for me, guys. I hope you guys enjoy that session. FOMC sucked, the initial release, but we're just so bullish that we just kept on riding it up. Even when we went down here, we looked for longs and it just pressed higher. If you guys want to see the same thing happen for non-farm payroll, I think we're gonna do it for on Discord. So you guys haven't seen it already. There's a premium AM channel which we do for AM lives, and there's gonna be the live one for everyone. We're gonna likely run it for everyone on Friday. So if you want to join the Discord,
on the labor market, I was wondering,
tune in there.
How
Feel
worried
free.
are you all about unemployment rising to the point where it triggers the.
All right, Ian,
Does that
message
potentially
me.
affect how quickly you cut rates?
So,
Well, stream on
so
Discord.
The question really is one of, are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule.
Not for Paper Friday. We'll stream on Discord for everyone. Link in the description, or link in the description.
Statistical thing.
Well, and then here.